Okay, Rudy here, 5th of December. Welcome to the weekly update of the Tank ETF, MVR, where we benchmark his performance against popular ETFs like VAS, VGS, etc. and have a look at his underlying holdings. If you're new here, welcome aboard. Before we get into it, this is why the Tank, I think, is the best core holding for the next 10 years because of this commodity super cycle back from the 1800s up and down. 2025 is here, so decade to go at least, according to them. So this is like a live chart of the commodity index. So that represents here, and it's a basket of commodities basically. So you've got a lovely cup and handle that we're now finally breaking out. Okay, so that's the theory. So here's the Tank. So basically there's 31 companies in him. I think the distribution was 4.8 the last 12 months. So you can see it's pretty evenly. There's no overweighting. So you got your BHP, Woodside, Fortescue's. We'll have a look at all their charts. But you can see 7, 7, 5, 4, 4, 3, 2, 2, 2, 2, then 1. So the further we go down, the less weighting. But essentially, up here is the heavyweights, and these are the underweights. Okay, so just go to a weekly chart. So this is when he became the Tank, and I'll explain why if you haven't seen it. So this is his weekly candle. So he finished up on the week a little bit. His job isn't to make 10% in a week because he's a Tank. We've got ninjas for that. But he's building a nice little pattern here. I think dips to this 20-day moving average. If you're thinking of buying, is good buying. So if we look at VAS first. So VAS had it was pretty flat week for the week. So what we do is we benchmark. So we take the chart of MVR and divide it by the chart of VAS. So you can see back here on the 4th of August, this is when MVR started outperforming VAS. So for the last, that's probably a month, they've been a draw, and he's now starting his next leg up of outperformance. Now, I just want to show the long-term picture of this ratio. So this cuts out at 2014. So I use the XMJ index as a proxy, and just to show you that I'm not trying to trick you. So this blue line is the MVR, but you can see there's longer history. So why am I doing that? To show you this. So this is basically MVR over VAS. So you can see here, back here, it was outperformance, and then VAS outperformed, and then MVR outperformed, then VAS, and now we're about to go on this big journey of MVR outperforming the VAS. Okay, IVV, that's another popular ETF. If we go to a weekly chart. Okay, so IVV's been good. Now if we benchmark MVR over IVV, we can see he's been outperforming. And again, if we use for historical reference, longer time period, this is XMJ or MVR over IVV, or the S&P 500. So again, materials outperforming, and you wanted to have all your money in IVV. since 2010. But we're now breaking out of this declining wedge, and this is a bullish pattern. So we've got MVR to outperform the American share market. Okay, VGS. So it's another popular one. So if we benchmark MVR over VGS, okay, you're a bit slow today. Okay, so MVR has been outperforming VGS again since the 4th of August. Okay, this is a new one that Macquarie put out this week, the Macquarie Core Global Equity Active ETF. 200 to 500 best global companies. Okay, all right, so I thought I'd put the tank up against him. So there we go. So the tank outperforming Macquarie's best ETF there. VDGR. This is an Australian super diversified index. Because some people have used basically you can't buy MVR in Australian super, but you can replicate it with some shares. I know a few of them have done that. So this is MVR over that option. So outperforming. Qual, it's another popular ETF. Outperforming. MVR over NDQ. So this is a challenge for him, but he's still been, since 4th of August, been outperforming. Actually up 10% over NDQ. So he's got a bit of resistance here, so he still hasn't nailed him, but I'm sure he will. MVR over VDHG, that's your DHHF, so that's too easy for the tank. Now the miners ETF, so this is, if you're new, this is what I call a ninja ETF. So this is global gold miners. But if we do MVR, the tank over the miners, the tank will never beat this guy. That's not his job. Although this week he did get up. he got miners by a little bit. So if you're new, all this ninja tank methodology gets explained at the end. Okay, so let's get into some underlying holdings. And before we do, we look at the underlying commodity first. So we got the copper price just breaking out of that since 2021, consolidation. So that's on its way up here over the next, who knows, many years, but it's going up. Iron ore, just go to a weekly chart. So I don't think iron ore is going to break out here. I'm just looking for sideways action. So we're looking at them because BHP, it's basically copper and iron ore. They do have a bit of coal. But you can see now BHP's finally breaking out of all this consolidation there. So that's going to run up now. Oil. So the oil price. So again, I still think it's setting up a long-term bullish pattern if we go back to a monthly chart. So you can see oil, and it's just coming down into these declining wedges here. So we're somewhere near a bottom. Do I expect it to be like gold? No, maybe, who knows. Natural gas price, so that's now breaking out. So that flows through to this guy, Woodside. Now Woodside's having a little issue at the moment with the union. They're trying to complete their the second train of their Pluto project. I think 91% complete, but the unions want a 30% pay rise. But it's not meant to come into production until late next year anyway. But I was wondering why it wasn't getting a kick. Anyway, he pays the divs. The tank needs divs. Okay, gold price. So gold price is it's just sitting nicely. That's all it has to do is just go sideways for our gold miners, because they're printing money. So Northern Star, it's down this week, but it needs to. I don't think until they start reporting and people see how much money they're making. So it could still drop down to here, and the trend's still bullish. But I find with the tank, when one quantity's up, the other one's down, and they just sort of balance each other out. So next in line is Fortescue. So he's doing his job there. Alright, next we got Rio. Actually, we should look at aluminium price first. Rio does a bit of, so aluminium breaking out. So you can see this concept, they're breaking out of multi-year bases. So Rio is copper, iron ore and aluminium. So they're about to make new highs. Okay, zinc, another commodity breaking out. Lead, even lead, look at that, it's got a bit of a green candle there this week. And silver, what are they doing to her? Alright, so for those who watch the channel, you know this is my girlfriend. So they're not letting her, they're capping her, but she's formed a bottom here, so that's very nice. Now we look at that because well, South 32 is zinc and lead, but silver's a byproduct. It doesn't impact their earnings though. South 32 is now breaking out. Then we got Evolution, when you're ready. So they're copper and gold, so they're breaking out. Then we got Origin, so they're oil and gas basically, and they do sell your electricity. Santos, when you're ready. So Santos is oil and gas. It's pretty a non-performer, but it's an ETF, so you just got to stick with it. Orica, so they're in the explosive business for blowing up land so they can mine it. Ramelius, so they're a gold producer. And then we've got the lithium price. So the lithium price has gone berserk. Anyway, so that flows through to, we've got Pilbara Minerals. So yeah, they're probably a buy here, the 20-day. So that's all good. Linus, so the rare earths. So I'd probably be buying them around here. But this is an ETF, so you get it all in one. Worley, so they're a bit disappointing at the moment. I don't understand why, but they're in engineering project management for copper and oil and gas, so they should be busy. Anyway, Ampol, so they buy, refine and sell the petrol. Perseus, so another gold stock that's just having a breather, again could come back here. They're still cheap, these gold stocks. Coal, so coal's just trading sideways. So why do we look at that? Because we've got Whitehaven Coal in there. And look at him, he's breaking out too. A lovely declining channel wedge. Then we got Min. So they're mining services, and a bit of lithium, and a bit of iron ore in there. So they're like a little mini tank. Anyway, they look good. Genesis, so it's another gold miner. So they're all just having a breather this week. That's good. Capricorn, so it's another gold miner. That's fine. Sandfire, so they're copper. That's beautiful. That Horizon, been pushing this one as an individual. Nice divvy. That's the other thing is the tank's got some good divvy stocks in here. They're rail freight operator. Dino label, so they're commercial explosives for mining. Regis, another gold stock, just having a breather. Liontown, so lithium, so they're a buy around here. And we have ninjas, so if you're new, you add ninjas to the tank, and I'll get into that later. As we go down the list, they get a bit more exciting. Uranium, so spot price, I think it won't go much lower than that, otherwise other people will buy it. So that goes through to Platon, so uranium miner, he's been buy. Monadelphous, so mining services, so he's got plenty of work. Iluka, so they're sort of in that rare earthy space, so I would like them to drop a bit more. Anyway, they're fine. And IGO, so they're another lithium miner. They're a buy today. Now obviously these guys don't make a dent in the tank. They don't have a high weighting, but that's life. You use ninjas. Beach, so they're oil and gas, mainly gas. They should get going. And then the Terra Royalties, so they're nice div, iron ore royalty company. All right, so they're the underlying holdings of the tank. So now we get into how you create a portfolio around him. Okay, putting the portfolio together by Rooster Productions. Okay, so how I see it is think of it, it's a war game. So the objective is to destroy the enemy who live in the castle, and they've got riches in the castle. So the first decision is what type of attack will I do? That basically depends on, do I want the riches in the castle? So basically if you say yes you want the riches, then you're saying you want high growth. If you don't want the riches, just means you want income with a bit of growth above inflation. Okay. Alright, so you decided you want the riches. So the plan of attack, you're going to need a tank to destroy the castle, and then some ninjas to go and steal the riches. Okay. Alright, so the tank is MVR, so he just sits in the background there and drops his bombs, throws his missiles into the castle. So he doesn't get his hands dirty really, but he does good hard chunk of it. And then you're going to need some ninjas. So these ninjas do a dangerous job, obviously, because they're going into the castle. So there's two types of ninjas. There's ASX ninjas. So there's ETFs like XMET, which is a sort of, it's got a whole lot of copper, rare earths, lithium, silver miners in there. It's not bad. Uranium miners, gold miners, your silver ETF, your copper miners, your small companies ETF, like a defence tech ETF, or any of your own growth ideas or shares that you might have. Then we've got some special US-based ninjas. So these are which you can't get on the ASX. So these guys do a bit more of a powerful job than the ASX ones. So we've got a rare earth ETF, a uranium ETF, but these are the large caps. These are the medium cap uranium miners. SilJ, which is your silver miners. You get a little bit of them in XMET. GDXJ, which is your mid-tier gold producers. Miners is your senior gold producers. So in a bull market, the mediums outpace the seniors. So that's why I say they've got special growth powers. And LitP, which is a lithium ETF. You get a bit of lithium in there. But you get more depth. So in here, for example, in XMET, you might get 1 or 2 companies in lithium, whereas in here you get about 30. Okay, alright, so what percent of tank and ninjas should I use? Alright, well, so ultimate risk, like game on, I'll take anything. Alright, then you just go with no tank and just ninjas. Okay, you just go all in. So it can be done. I do have a subscriber who's done the just ninjas, and he in his first month he got a bit nervous because it dropped 10% in a week. Now he's laughing, but ninjas do a dangerous job. So if you're going to have ninja, you're going to expect, a week one of those ninjas could drop 10% in a week. Let's just set that. That's how dangerous the job is. But in a bull market, I expect them to come back like that sub did. He was in Remex, the rare earth one. Now he's up about 30 or 40%. Or you can go medium risk, okay? So that would be a 50-50 job, 50 tank, 50 ninjas. Or you can go low risk, but not low risk as in cash, but that would be just the tank. But I'm still, when you go the tank, I'm still expecting the tank to outperform VAS, VGS, IVV. So it's not, it's not low risk like in the bank. There's still volatility, but the tank isn't going to drop 10% in a week. Okay, so you got to sort of work out your risk profile there. I don't want to be given personal advice around, what. The rooster, I'll get in trouble from the rooster. He's my compliance officer. All right, or you decided, okay, I don't want the riches. I've got enough money. I don't need to make 30-40% in a year. I'm just exaggerating, but these ninjas I expect to make at least 10-20% per annum. A lot of them are up all that in 6 months. But it's nothing's guaranteed. It's a dangerous job. You get reward for the risk you take. All right, so you're still going to need a tank to destroy the castle, because you can't. You've got to do some work. But you're going to need some drinking buddies. Just sit in the tank with you. So your drinking buddies are like your VHY, SYI, so dividend ETFs, ASX 300 div shares, property trusts. Okay, so in this scenario, what percent of tank and drinking buddies? Well, I'm thinking, like, if you're on ultimate income, then you go like 30% tank, because the tank's going to pay you a 4% div. So you can put that in the bank. And then say 70% drinking buddies, who'll pay you, I don't know, 6%. So that you still got you could just have drinking buddies, but they'll drink too much and they won't do any work. So the tanks, the growth performance of the tank will outperform the drinking buddies. Okay, because the tank's going to outperform VAS, and VAS is sort of the banks and your drinking buddies. Okay, so all right, or you want a good income but a bit of extra growth. So you set the bench, say 50% tank and 50% drinking buddies. All right, so that's just a framework. And each weekend I go through, do a video on the dividend shares and ETFs, and I do a video on all the ninjas. All right, hope you enjoyed that. Let us know your thoughts. See ya.